Good morning, everybody. It is the 5th of October. I'm Joe Neighbour from Signal Centre, all by myself this morning. No Taff, no Jamie, no Steve. They'll be back very soon from various trips and excursions. Of course, Jamie won't. He's sadly now moved on to new challenges, and we wish him all the very best. So, going to do my very best today to try and run through all the latest headlines and have a look at some charts for you all and try and set you up for the day ahead. So first of all, let's get to the latest headlines. My internet is a little bit slow this morning, so do please bear with me. In terms of the latest headlines, when they finally do come on the screen, we are going to see about the US JOLTS data yesterday, which recorded a decline in the job openings to 10.05 million for August, from a revised number of 11.17 million the previous month. This was below the expectations and the sharpest monthly decline on record. So data still continues to come in pretty negatively, and of course that is impacting markets around the world. But at the moment, we are seeing this kind of weird phenomenon where bad news is being seen as good news by the market, because there are belief out there that, or there is belief out there that we will see some form of pivot maybe from the Federal Reserve at some point, and that seems to be what the markets are getting excited about. Going to give up on those headlines because they just don't seem want to work. But in terms of what else is going on there, hawkish Fed rhetoric has continued despite worry thinking that there would be a pivot from the Federal Reserve at some point. The latest Fed speaker, the San Francisco Fed President Daly, stated that the central bank needed to increase interest rates further and then hold policies until they are truly done with getting inflation down. This was also supported by the Fed Governor. Jefferson stated that the central bank had acted boldly and is committed to taking further steps. He added that restoring price stability will likely entail a period of below trend growth. Markets, however, do sense a bit of a pivot. The Fed rhetoric was relatively hawkish, but markets were more convinced that the central banks would shift to a less aggressive stance, especially if there is further evidence of a cooling in the labour market. Global equities rebounded further yesterday. It was the biggest, or one of the biggest, two-day rallies that we'd seen for some time, I think going back to 2020, from what I read yesterday. There is continued confusion as to what's going on with the UK government. There is further uncertainty over the timing of the UK medium-term fiscal statement. According to the Treasury Committee, the report would be brought forward, but Chancellor Kwarteng stated that the plan would be delivered on November 23rd, in line with his original timetable. The uncertainty did trigger some further reservations over fiscal policy. Overnight, we had the Reserve Bank of New Zealand increased interest rates by 50 basis points to a 7-year high, taking the overall rate to 3.5%, and that was in line with the consensus forecast. So let's get onto the charts then, taking a look first of all at the dollar index today. Continues to trade in a nice uptrend, as we can see here on the daily chart, but there has been a pretty sizable correction in the dollar index over the last few sessions. If we look at this as a percentage basis, we can see almost a 4% move to the downside has been seen here on the dollar index, and we've pulled back to test the reverse side of a 78.6% fib level. I'm not sure how relevant that is now, but it seems to be holding. There is a number of highs in here as well that we can reference as well for support. But overall, the trend remains very strong. And although we are seeing a decent correction in price, I'm not going to get too worried about that just at this moment in time. I think we could see prices move towards 109.29 in the short term, and therefore we may see a bounce from that level. So let's have a look at the currencies that are being impacted by this as well. So Euro, US dollar continues to trade in the downtrend, as we have here on the chart. I'm not sure where my annotations have gone. Really struggling with the old internet today, but as we can see, big downtrend. I've actually got a channel drawn on here when my annotations decide to show their face on the screen. I've highlighted a resistance level that for me was piquing my interest. That was there at 10060. So we've got effectively an untested level in there prior to a big move to the downside. These seem to be levels that I think attract attention, and that also pretty much lines up with this downtrend resistance line. I'm going to draw it on fresh just to try and bring it up on the screen. Let's go with that. Hopefully this is streaming. I don't think it's working on TradingView at the minute, but hopefully it's going through to YouTube. Yeah, so downtrend channel, as we can see there, got a resistance level for me at 10059. So that is where I'd be targeting potentially fresh short selling to re-emerge. Take a look at cable. That continues its decent rally from the intervention that we saw from the Bank of England last week. We are approaching downtrend resistance. A little bit higher up, but also a level in there that is interesting me is just there, which is at 116.00. Be interested to see what sort of reaction, if any, we get at that level, where that could maybe prompt a little bit of stability in the price following this sharp rally to the upside. Let's take a look at some of the other dollar markets, shall we? Let's take a look at Aussie US dollar. Not really a lot going on here. Prices moving around sideways, but some pretty large ranges on the daily charts there. Let's take a look at the New Zealand dollar, similar sort of situation, a little bit of a poke higher today, but it hasn't been able to be sustained. So it looks as though we're going to continue to see quite choppy price action there. If we take a look at dollar CAD, that has reversed quite nicely. There is a resistance level up here that interested me. There was a number of lows from back here in April 2020. So those two lows there that we can see, maybe a third attempt. We've rallied just shy of that level before posting a decent reversal. So a bearish engulfing candle posted there on the 3rd of October, and prices have continued to move to the downside this morning. Looking at US dollar Swiss franc, really choppy here, some really big ranges, a big engulfing candle posted yesterday. Really looks quite undecided to me. And if you look at this from a range perspective, we can see obviously the highs up here, the lows down here. Likely that prices are going to remain within this for the time being, and therefore we are likely to see some quite choppy price action. Let's move on to Bitcoin then. So given that we saw a decent rally in equities yesterday, this hasn't really followed through to the cryptocurrency market just yet. Prices moving sideways for the time being. Decent move up yesterday, trying to put on some strength today, but down by 0.4% as things stand. Still very early in the session, so we'll see if anything can change there. But it looks as though support is being found around 18,600, and we'll be looking for resistance roughly here at 25,338. So from a risk reward perspective, if you believe this is a range setup, then it looks quite nice, I guess, if you were to buy, targeting a move to the upper end of the range, and with a fairly tight stop below the recent lows, you're looking at about 2.31 R or risk reward ratio on that today. Let's move on to the commodities then. It's getting quite interesting in silver and gold, actually. So nice little bottom pattern formed here on silver. You could argue a inverse head and shoulders has been formed there. Let's just try and draw that on with fresh eyes. So we're going, this is the left shoulder, this is the neckline, this is the head, this is the right shoulder, or maybe even that, forming there. Let's just clean that up. So yeah, interesting move there to the upside. If we get on some horizontal lines, because I always tend to prefer those, we've taken out this previous high here from the 15th of August. And if we look at this on an intraday basis, we can see we've had a little bit of a pullback this morning to retest the newly formed support level. And so far, it seems to be holding. So potentially, we could see some buyers step in here, liking the structure that we've seen here on the daily chart, and be looking to push prices higher. Obviously, this is a beneficiary of a weaker dollar. If we take a look at gold, overall, the trend still remains in place for me. Is there a channel there? I think I had one drawn on my charts prior to my annotations being removed. And yeah, we can see there's a nice looking channel in place there. And we are testing the upper side of that at the moment. I'd also be interested in seeing maybe a break of this horizontal resistance here at 1735. I think if we can see that, as well as breaking above this bearish channel on a closing basis on the daily chart, then that may indicate that we are going to see a decent correction to the upside on gold. Let's take a look at oil, see if there's any change there. Still looks to be trading in a bearish channel here as well. Let's just get this drawn on the chart. So we've got the channel there. Price is still contained within that. Decent move to the upside yesterday, A little bit flat today, but all in all, it is posting green as things stand. Still needs to do a bit of work before we can get bullish about this again. Obviously, we want generally oil prices to remain low, unless obviously you're long, because it impacts us in many other walks of life as well. Let's take a look at natural gas quickly. That has posted a decent, well, arguably in the process of forming a really large double top, which we have formed here. So we've got the top here from the 8th of June and then another one here from the 23rd of August. In order to complete that pattern, we'd need to see a breakdown below these lows here from the 30th of June at 5342. But we can also, on the shorter term charts, maybe work out a head and shoulders top here. This being the left shoulder, this being the head, this being the right shoulder. And we've seen prices break to the downside and continue to move lower. Attempted to correct yesterday, but we're back on the negative side of things today, down by 1.4% as things stand. Let's move on to the equity markets. The ASX 200 seen a really nice bounce to the upside in the last few sessions. We've got a major support level at 6403. We saw this bullish engulfing candle form on the 3rd. We saw some really strong follow through yesterday following the pivot from the Royal Bank of Australia, who pushed interest rates only up by 0.25% as expected. They were looking for a 50 basis point hike. So the softening of the monetary policy stance there has given some upside impetus to this market. Looking at the euro markets, so Euro Stoxx 50, there is a big support level that we had drawn on the chart. Again, not sure where my annotations have gone, but we rallied substantially above that to recapture the 3386 level, which is a positive sign. That may indicate that we are going to see a higher correction in the short term. Bear market rallies is what I'd probably confirm these as at the time being. And they can be very vicious. They can be very lucrative as well if you get the timing right. But just do bear in mind that we are still trading in a sequence of lower highs and lower lows as things stand. And until that can be reversed, you have to say that we are still in a downtrend with these markets, and therefore the underlying bias will remain on the bearish side. DAX, so that fell through major support. I believe that was around 12,431. But again, we've recaptured that with a pretty smart move in the last two sessions. Again, clearly you can see here a sequence of lower highs and lower lows. And if that is to persist, then we would expect this rally to be capped probably somewhere around 13,100. If we are to keep this sequence up. Obviously, if it does break to the upside, then that may suggest we are going to see higher prices in the short term. But for now, let's make the most of the rally, capture some gains if you can, or maybe get out of some positions that haven't been performing too well, and now you've just been offered a bit of relief. Looking at the NASDAQ, we saw that break down through support late last week on the monthly close, back above it as things stand. So that is encouraging. Really big rally in the last two sessions. I did look at the kind of constituents that were rallying yesterday, and it seemed to be a lot of the kind of unprofitable tech names that were getting the biggest boost. Kind of a dash to trash, if you like, which is often what you see when markets are in phases of decline. People tend to go for the most beaten up names in the hope that they can capture some quick gains, and that seems to be what's happening today, and that doesn't generally make for much of a sustainable rally, so do bear that in mind. Looking at the S&P 500, again, big move to the upside in the last two sessions, as we can see here. This big bullish outside day candle that was formed on the 3rd of October really encouraged the bulls to continue their efforts yesterday. Big move to the upside, closing on the highs of the session, down by around about 0.5% today as we call off that move a little bit and give some of it back. But this is a major level. I mean, if we take out these lows here, then that would indicate we are going to see further decline over the short to medium term. Going to finish off the index roundup on the FTSE 100. This is just a mega level really on the FTSE 100, around 68.22, 68.42 on the daily chart. As you can see here, a number of touch points over a number of months on this market, and each time that we've revisited these levels, we've seen some pretty powerful moves to the upside, and this latest example is no different. Bullish engulfing candle formed on the 3rd of October. Really smart move to the upside yesterday. Let's see if we can continue this short-term momentum in the FTSE 100 as well. Going to wrap it up there. Not going to look at any stocks unless there are any specific requests, but I'm not sure they're going to be because I'm having some problems with the stream. But if anybody is looking at any stocks or wants me to take a look at anything, please feel free to post it up. Okay, looking next at the gun to the head challenge. So this is where each day we pick a live trade on the video in the hope that we can make some returns between now and the close of business tonight, or 9 o'clock actually UK time is when we close these off, or when the stops or the targets are hit. If anybody wants to check these out, you can do so if you check out our TradingView profile, which is at signal_center. Clearly having issues with that too. Yesterday we had 3 trades, all of which were stopped out. So you'll be able to find those on our profile. I'm not going to go too much into too much detail. Lots of volatility still around in the markets impacting those trades. So I've got to pick something fresh today. And just by going through these charts this morning, the one that really stood out for me was silver. Looking at this on the daily setup, looks as though we're completing maybe a short-term bottom. We saw a close above this resistance at 20.87 yesterday, and on an intraday basis, we are seeing a pullback to retest that newly formed support. So hopefully that's going to do a job today. If I just take a look at the intradays, I don't think it's going to let me. All right, let's look at the hourly. So we've got the blue line drawn on here for our daily setup. Let's go with a buy, shall we? Let's buy it here at 20.82. Going to target a decent-ish move to the upside, and let's get our stop sorted as well. Let's go there at 20.47. And then for the upside targets, is there anything on the left-hand side that we can reference? Let's maybe go back to the 4-hour to see if there's anything there. Let's draw on some fib lines then. So from this high here on the 6th of June down to these lows here, we've got 78.6%, which doesn't give me enough R. So let's just push that up a little bit into these highs here. These highs from the 17th to the 20th of June. That comes in at 21.92. So that's going to be my trade of the day. I'm buying silver into this small pullback, looking for a move high to 21.92, stop loss at 20.47. My entry was at 20.82, looking for a 3.16 R return on that one today. I'll get it published up to the TradingView profile in a moment. In terms of data later today, we do have the US ADP employment number at 1:15 UK time. That's always a precursor to the non-farm payroll number, which is due out on Friday. We also have US ISM non-manufacturing index number at 3 o'clock, and then at 3:30 we have the US EIA crude inventory numbers. So a couple of bits to keep us interested today on the economic data front, as well as everything else that's going on, of course, in the markets at the moment. So that's it from me, short and sweet. Hopefully it was enjoyable. Hopefully you learned something. I'll be back tomorrow, and hopefully my internet will be working a bit smoother than it is currently. Enjoy the rest of your day, guys. Goodbye.